Welcome to the Futures Forum, our event series featuring business leaders and trailblazers for the future. I'm Catherine Bischoff, Chief Relationship Officer at Factory Berlin. We at Factory Berlin unite companies with the brightest minds from the startup scene to create new collaborative opportunities and devise concrete solutions for a better tomorrow. With over 3,000 members with a diverse set of skills, technologies, and networks, we incentivize connection in our physical spaces, with our digital tools, and through events like these. Speaking of diversity in our community, last week we released a message of solidarity with the Black Lives Matter movement, after being confronted about how we need to make changes in our work to create safe spaces for Black people. You'll likely notice that today we don't have Black speakers on stage, which we are fully aware is not good enough, and it's indicative of the lack of representation across tech and finance sectors. We announced a set of plans we have to ensure we are not just talking about diversity, but we take actions to support Black people in our community and far, far beyond. With these actions, we can ensure that our events are curated with all perspectives in mind. If you want to get involved, please get in touch. We're here to listen, to learn, and ultimately to take action together. Now on to our Futures Forum. Today, we're investigating the opportunities that a crisis like COVID-19 present for the growing fintech businesses, but also what are the challenges associated with startups and SMEs in the space? How important is collaboration between corporate incumbents and agile newcomers? And what exactly does that look like? What we have seen is that the usage of fintech apps has risen dramatically in Europe over the last months alone. The Swiss-based financial services company Deborrah published research indicating that there was the massive 72% bounce in fintech app usage is a part of a fundamental adaptation to life in lockdown. A key question is how fintechs may leverage their unique assets and skills and agility to seize new opportunities in the future. It could be an opportune time to think big and act boldly. We'd like to thank our collaborator F10 on putting this event together. F10 is a Zurich and Singapore-based fintech incubator and accelerator which supports and guides startups in transforming their ideas into successful companies while stimulating worldwide collaboration with international finance organizations. The accelerator already has a proven track record of innovation, acceleration, and product creation for the financial services. Working with SIX, the Swiss Stock Exchange, and other leading financial institutions, F10 is at the forefront of the new financial paradigm, bridging the gap between exciting new ideas and tomorrow's leading products. I'd like to introduce Deborrah Schaer, lead accelerator in open banking at F10 Fintech Incubator and Accelerator. Deborrah started her career in the fashion industry and co-founded a fashion startup before moving to the African continent, where she has helped build multiple tech ventures from scratch. After 2 years in management consulting, she joined a Swiss IoT startup that was acquired by Husqvarna Group. Now at F10, Deborrah heads the accelerator and open banking activities and works as a startup coach. She's part of the advisory board of several startups and a mentor at Startup Bootcamp Africa. We're looking forward to your insights, Deborah, and examples of how fintechs will turn this COVID situation into a springboard. Take it away.
Thank you very much, Catherine. Thank you for the kind introduction, and thank you so much for having me. Good evening, everybody. I will share my screen to kick off with my presentation. And I'm going to use the next 15 minutes to talk about fintech and what the industry has been through before Corona and what are the odds with fintech now after COVID-19 or during COVID-19. And I'm going to talk a little bit about F10 and what we do, and then, of course, the fintech trends that we've seen over the last couple of years in Europe, particularly. And then I'm going to show you guys a couple of examples how some of the fintech companies from our ecosystem have transformed during Corona. So who is F10? As Catherine already mentioned, we're Swiss-based. We also have a branch in Singapore, and we're basically, like many other accelerators, are backed by many corporates from the traditional industry, particularly insurance. We also have a bunch of banks, and we have SIX, the stock exchange. We also have our Free as a technology company. And all these companies, they want to collaborate with the fintechs that we have in our portfolio. It's currently about 70 fintechs that we have been accelerating and incubating over the last 5 years since F10 is existing. So basically, how do we do this? Well, we help entrepreneurs really coming from an idea to then essentially growing their company to really rock the markets that they are in. We organize hackathons. We have the largest fintech hackathon in Europe that we do once a year. It's a weekend event where you can find collaborators and generate your prototypes in fintech. We also have an incubation program, which is our flagship program for 6 months for pre-revenue, super early stage fintechs. And then also we have a new program, it's called the Scale Up program, which focuses on post-revenue seed stage companies in fintech that also would like to collaborate with our corporate members and of course other corporates around Europe. And also we bring them together with investors from our investor community. So this is in a nutshell what F10 is doing. So a strong focus is on the collaboration between the incumbent world and the innovative fintech world. So what are the trends we've been seeing? And I want to kind of narrow this down a little bit to B2B, because I mean, many of you probably know Revolut, you guys know N26 from Berlin, but not so many people maybe know what is fintech really when it comes to B2B and when it comes to collaboration with the traditional industries. And the kind of sectors that we're focusing on with our fintechs is banking, of course, retail banking, private banking, and then also capital markets. And then the third layer would be insurance. And then we would talk about insurtech, which is sort of a part of fintech as well. And basically, we have seen few major trends which go across all of these industries. And when you talk about your prototypical fintech companies, oftentimes those are data analytics companies that help these industries to analyze data. The financial sector is very, very strongly focused on data transactions. That's basically all they do, right? So how can they create insights that help them to a better performance? And speaking of performance, and that would be the second block here, would be innovating processes and internal automation of many things that banks struggle with, digitizing many processes. That also goes for regulation. As you know, the financial industry is a highly regulated industry. And a lot of these companies that are called RegTech, which means regulation technology, they help with, such, weird things called KYC or AML, which would be know your customer, or anti-money laundering. So those are all these buzzwords that a lot of fintechs focus to help these banks and other incumbents to really digitize their processes. And then we have cybersecurity, which is a huge trend also within the industry. So we have a lot of cybersecurity ventures also at the F10 and within the fintech ecosystem. And then we have digital identity as a huge trend also that is just picking up now. And then we have a couple of trends that are specific to those, verticals here. Which in the banking, open banking, which is basically finding integration points via APIs with banks and fintechs. So basically that means a lot of banks are looking to expand their services via fintechs and other third parties. And for that, they have to create a technical infrastructure that is basically picking up those topics. And then we have digital banks like Pentaand, for example, or N26 in Germany that basically just build a bank from scratch because sometimes it's just easier to just have a fully digital offer right from the get-go. And then one other major trend that we are seeing, especially in Germany and also Switzerland, which is very, very strong when it comes to SMEs that are kind of the backbone also of the economy, is to provide all kinds of digital SME services and particularly financial services. So banks are also looking to work with these kind of fintechs to really provide services to their SME clients. When it comes to capital markets, DLT or blockchain is very, very the flavor of the month. So we're talking about digital asset here, which is basically any assets like art, like wine, that's slowly but steadily now are getting digitized, and that you can now also trade in a capital market ecosystem that is growingly digitizing. So we have a lot of fintechs that focus on that, and of course now you can trade things that you were previously not been able to trade. And the blockchain technology also helps to create new marketplaces and new business models basically in the capital market space. And then when it comes to insurance, the two big trends are brokerage. So how do you really sell an insurance product to your customers in a digital way? Or how do you underwrite? How do you onboard clients? Those things all need to be digitized. And that's what these insurtech companies are focusing on. So this is basically a little bit in a nutshell what kind of topics we're focusing on. So it has a lot to do with digitizing the current market. By the way, fintech is a word that hasn't really existed before the financial crisis in 2008. And it was just around that crisis, so roughly 10 years now, since the industry has really started to work with technology. And this is when fintech basically then came across. And if you look at the numbers, and this is some statistics from the last couple of years in terms of how much money was invested in the fintech sector and in fintech industries, you can see it's really, really growing. And we saw a record $39 billion that has been invested in fintechs worldwide. I think the number for 2019 was just slightly lower than that, but overall you can say it's really picking up. It's a huge industry, and I think there's lots more to come still. There's also many unicorns that have been created over the last years. This is a TechCrunch graphic. You can maybe recognize some of the very famous B2C startups like WeFox, or also Klarna from Sweden. So those guys were all unicorns. So the industry is really also now getting a lot of attention from investors. But of course, there's many more than those guys. As I said, like there's a lot of B2B solutions that may not have that, they may not be as famous because they're kind of working in the background and working with banks. And you and I will never really know that this was actually a fintech that made this digitization possible in the industry. And then Corona happened, right? And everything got canceled, and we had lockdown, and of course we're still in that kind of crisis globally. So what did that mean for the fintech industry? And this is statistics from the Swiss Finance Startup Association, and they asked a lot of startups and also fintechs particularly. So what are you going to do now, right? So what is your reaction, and what are your short-term plans? And the first bulk there, the 55% said we're actually going to get out of business. So it also hit hard. Many fintechs, especially the ones like in all the startup worlds that just got started and maybe didn't have a lot of money, they said, okay, we have to cancel our business. But the other 50%, they were really motivated and said, we're going to identify new possibilities that this crisis may have for us, and we're going to really invest in our startup, and we're going to invest in new ideas, and we're going to also invest in new products. So basically they went with Winston Churchill here, who said, never let a good crisis go to waste. And that is definitely true, also for the fintech industry. And I brought you a couple of examples, mainly from our fintech ecosystem at F10, and use cases that shows you a little bit how did these fintech companies make use of that crisis. And one example is from a company that has been recently incubated by us, by F10. It's called Equitech. It's a Swiss company. And basically what Equitech does is they provide an application where you can have your shares. If you're invested in a company, if you're a co-founder of a company, of your own startup, you can have those shares digital in their application. But once you have shares, you also need to have an AGM, which stands for Annual General Meeting. That is mandatory. It's by law. You have to have those meetings with the other investors. So how do you do that during Corona when nobody is allowed to meet? And they have been basically built a new feature where you can have those annual meetings with your other shareholders, fully regulation prone. Everything was up to legal standard. You could vote within this application, and it really made it possible that those mandatory annual meetings did not have to be postponed for shareholders. So they basically came up with this feature within a couple of weeks just after the crisis hit, which is one example of how to go about it. And really obviously favorable with their clients, and they did actually also acquire a lot more clients via this particular application, because it obviously also makes for a good marketing story. The second one, this is a robo-advisor from Switzerland also, Selma. It's my favorite robo-advisor. So basically you can invest your money in a platform where they would then automatically trade it for you, right, rather than having it on your savings account. And for Selma and these guys, it was the moment to really connect with their customers, because everybody was like, well, I either have invested my money already, now we have this economic crisis, what are we going to do about it? And they had a lot of interactions, but mostly they had a lot of new users, right? Because, obviously people were like, now would maybe be the time when I can buy cheap stocks since the economy is sort of down. And so they actually doubled their user base within a few weeks during Corona, because everybody was kind of keen to also then, benefit in a very easy, digital, comfortable way from those cheap share prices. Right, so that's another example from Switzerland. And now I also brought a German example. Azur is a Berlin-based company, also been part of the F10 incubator. And basically they build mobile banking for banks and also other companies that sort of want to have a bank experience for their customers. And the demands for online banking kind of went up a lot. It seemed like people have much more time to spend with their online banking. Finally, people, went online, and online banking is not just convenient, but you can also obviously buy other products within your online banking. For example, you can buy travel insurance, and your bank within this framework can also then obviously recommend this for you. So what the customers here wanted was a lot of, well, actually the bank customer wanted was a lot more features that they could give for their customers that finally went online, and they would finally buy some other, finance products within their online experiences that kind of increased during Corona. So they also benefited from that crisis. And last but not least, a company called Noam is an American company from San Francisco. What they did, so they were in talks already with a bunch of banks, particularly also one large bank in Switzerland. And as you know, a lot of the governments basically said companies can now go and get credit, and we, the government, are going to basically guarantee for it, which obviously calls to run on banks for credit. And all these banks all of a sudden had a lot to do. They couldn't just not check these companies at all. They still had to do a bit of a risk scoring. They had to still stick to compliance when it comes to giving away credits. So basically the startups went to the bank and said, look, with our automation solution, we can automate that process for you. And within a couple of days, they integrated their system within the bank system, and it saved up to almost 50% of the work hours that the bank had, and otherwise would have had to spend manually with people to checking those credit requests. So those are 4 examples that I brought to you that shows a little bit also the uplifting side, maybe of that crisis for the fintech industry. And I want to close with a quote, this time by a woman, since we also want to have some diversity. Laurie Greiner from Shark Tank, who said, entrepreneurship is the way we take control over our lives in a tough economy. And I thought that's quite inspiring to see those entrepreneurs really kind of, coming up with creativity and agility to, really make the most of that. So that was my little introduction, and I'm looking forward to deepen that conversation in our panel. Thank you very much for your attention.
Thank you, Deborah. So we're going to move it now into a panel format to discuss really how this COVID situation has either threatened or given opportunities to the fintech landscape. Here at Factory Berlin, we've seen some of our in-house fintech startups flourish, so we're really excited to hear from our members, Pentaand and Société Générale, as well as Fintech Capital, and how they see this crisis empowering digitization in the financial sector. I'd like to introduce the speakers to you. Start off with Christoph Bauer. He is innovation evangelist at Société Générale and has a background in consulting with a focus on all things innovation. He works at Société Générale on the Der Link team here in Berlin, which supports the German entities of the global banking group to move forward towards digital products and opening mindsets. Lukas Zörner is the Chief Product Officer at Pentaand. Before joining the Pentaand team, he founded Mespo, an AI-driven fintech startup, and worked in Morgan Stanley's investment banking division as well. Then we have Thierry Zois, who's investment manager at Finch Capital. Thierry joined Finch Capital in May 2018 from Cedars, where he was responsible for setting up the office in Amsterdam, covering Benelux. Prior to Cedars, he worked at Deliveroo in international operations team, which was responsible for market expansion. Before that, he co-founded FitPal, a company that tackled childhood obesity, which was linked to console gaming. So Deborah will kindly be moderating the panel, but if you, the audience, have any questions you'd like to ask, please do so. You can use the Slido or directly here on the YouTube chat, and then we will address those questions towards the end of this session. So invite the panelists to get on board, and looking forward to this chat.
Great, thanks for the intro.
Thank you very much, Catherine. So I have basically thought of a bunch of questions, especially for the other panelists, because we want to hear from them also. And then Catherine will let us know once we have some audience questions, and we're very happy to answer those as well to make this a little bit interactive. So I would kick off with maybe asking Luke what the experiences at Pentaand was, how you guys perceived the Corona crisis, what challenges you faced, and maybe also your opportunities that you might have generated out of that, and how your customers are doing in this time.
Yeah, sure. So, I mean, as a quick background, so at Pentaand, we provide a one-stop shop for small businesses and medium-sized businesses across traditional business banking, over prep accounting, over expense management. So kind of the whole value chain of a small business when it comes to the financial admin. And this, of course, already shows that there are a lot of opportunities and challenges which come out of the COVID crisis. But before I kind of dive into that, perhaps I think we all should, of course, bear in mind that there are kind of millions of personal tragedies associated with the current crisis. And that in tough situations like this, it's more clear and important than ever that we all need to work together and help each other out to get through this. And I think that was the spirit we also had when kind of COVID started to hit the smaller sized businesses. As you know, they have cash flow and liquidity topics to solve already in good times. So not having revenues for 2 months, of course, is definitely not something they were looking forward to, meaning it created a really, really complex situation where by no fault of their own, small businesses came into a challenge which is incredibly tricky to face. And of course, on the other side, this presented a big opportunity for fintechs and all other companies simply because there was a problem which needed to be solved. And I think all of this is part of a big fundamental momentum shift, I would say, in the market, where we can see, for example, in supermarkets, customers being asked to pay cashless and contactless. And in particular in Germany, where the Germans love their Bargeld, the cash, this was kind of a fundamental shift. And this is also what we saw in the communication with our customers, and also the way our customers were asking us for help. We received a tremendous amount of kind of requests for support. And so within a day, basically, we got all of our troops together, sat down and said, okay, look, we've got here something where we can really, really make a difference for our small businesses. And as former business owners, as us as founders, we also knew how bloody stressful this entire situation must be. And we kind of sat down and said, okay, look, what can we do? And the first topic which we really saw as an opportunity is how can we get more transparency into all of the government programs, all of the government paperwork, bits and pieces coming from this crisis? Because as you might know, in Germany, the government stepped in with a couple of programs and initiatives to really try to alleviate the burden from smaller businesses. So we launched a public help center, both on our public website, but also in our application, to really just bring the information together to make sure that there's enough transparency. And the second thing is we saw it as an opportunity, not only for us, but also in particular for our customers to really start to to be together. And so we started a petition under the nickname Seite an Seite, so side by side, where we kind of work together also with other fintechs in our space like Holvi or SumUp to really say, hey, look, we as fintechs are there for you. We want to help you, whatever it takes. And by lobbying with the government, we achieved a couple of big breakthroughs to really make sure that the government programs and subsidies are much better targeted at also smaller businesses. We didn't achieve everything, but we achieved a couple of bigger points, which made sure that smaller businesses really have a chance to get through this. And lastly, we also saw it as an opportunity to work together with traditional players, simply because in fintech, as you know, the capital is still with the larger banks. They have the balance sheet to lend from. And especially in Germany, there was also the willingness. So we started to kind of reach out to one of our investors, the Volksbank Group, where we said, okay, look, how can we figure out a way to help customers? Because it's not about competition these days. It's not about who gets the biggest share of the market and these type of topics. It's about how can we make sure that smaller businesses stay afloat? And so we started to work together with Volksbank Bielefeld as a test pilot, which in terms of paperwork, I think was unprecedented. It took us a week from idea to get it set up, to make sure that customers can access via Pentaand also funds from Volksbank. And I think this really shows that if we work together and if we kind of focus on the important points of solving a problem, there is no boundaries of what you can actually achieve. And I was really, really happy that we chose that path.
Cool, great. Thank you so much, Lucas, for that rundown on what you guys did. Looks like you had your hands full. So speaking of traditional banks, we have Christoph here from Société Générale, and I know that you guys are also working a lot with fintechs and also other startups, of course. So how have you perceived this time, and is there anything you could do to support those startups you're working with?
Oh, thanks for having me, first of all. For those of you who don't know Société Générale, quick rundown. We have been serving the real economy and obviously people since over 150 years. We have over 149,000 employees in 67 countries. We serve over 31 million clients and businesses and institutional clients. And in Germany, our presence is a bit smaller. We have roughly 3,500 employees working for us in very different business lines. Speaking of general strategy when it comes to cooperating with startups, I think this is unfazed by coronavirus because strategy is a thing that is a long-term view. On a tactical level, however, you might feel disruptions here and there, just like we felt disruptions in our operations that we fixed. You might have felt disruptions in our cooperations or in new prospects that we are having with startups. So when we look, for example, at introductions, we as a team, we might scout a solution that is delivered by a startup, and we find it interesting ourselves, or we are scouting because we know the internal pain point. And if this solution is not helping right now with the onboarding of clients or mitigating any of the risks or the stresses that occur with coronavirus and COVID, then you might get a friendly, that's interesting, Christoph, but maybe let's talk about it in Q3. Back from business, right? So in the beginning of the lockdown, we had to move a lot of staff to the home office, and obviously the focus was on keeping operations running. We succeeded in doing that. And by the way, I think a lot of internal processes have been changed by then. Our CIO famously joked about that COVID-19 achieved the transformation we should have done in 2 years and 2 months, at least for some teams. And that also can help when we have interactions with startups that really help us with onboarding of new clients. Because what we see along the line is that people who, before we reached out, but that also had a different channel to contact us, for example, in the equipment finance business, might not have been using the digital platforms that we have developed thus far, but as the sales agent wasn't able to come by or was not available or some other issues came up, you will see patterns emerging of behavior that haven't been there before. For example, people using online banking more, people using digital platforms more, and everything that is in the area of helping us people onboard quicker, everything that is in the area of helping people navigate these platforms a little bit easier, this is something that might have been accelerated, right? Cooperations with startup in that field. In other fields that are non-core, that don't help in the specific situations, we might have had a delay in the introduction or in the project itself.
Very interesting. Thanks, Christoph. And then maybe over to Thierry to just have a look at the investment side. I know that many of the startups that we also work with have been obviously afraid, right? And also to not get funding, to maybe not be able to fundraise. How have you experienced that? And what would be your advice to entrepreneurs that are fundraising at the moment?
Hi, Deborah. Thanks for the question. So I think it has a lot to do also in the industry that you're in. Fintech is extremely broad as a definition. And of course, there are some companies that flourish during those times of crisis, such as trading companies, as volatility is their best friend. Anything that has to do with the B2C challenger health. But of course, there are a lot that suffered, such as lending companies, the famous Revoluts of this world. They also suffered because, no more traveling, no more FX trading. So it really depends on which vertical you were positioned. Now, from our experience, we were quite lucky, as a majority of our portfolios did manage to close. But for those that did not manage, I mean, realistically, which also pictures the majority of the ecosystem, funds will not be as easily deployed as it used to. The bar is now set even higher. I think that bar was already high before, but now it's even trickier. And I would just calculate 6 months in addition to the fundraising efforts where we were currently at, right? But obviously, runway is the number one thing that kills startups. So what we at Finch try to do is to restructure the companies as much as possible. So managing losses with speed and accuracy was actually a core for survival. And then, there are various things that you can do. You can cut down on marketing spend, only focus solely on high return on investment channels, put as much effort as you can in product development. You should also be very transparent to the team about it. So communicate openly, not hide behind curtains and take sneaky decisions and lay off people. Like, just explain. I mean, everybody's human, right? And we saw like a huge consent throughout the teams that people were accepting to take pay cuts or even go part-time in terms of job, just because they had an affinity towards the company and would like to support it as much as they can. And then, depending in which jurisdiction that you reside, there are great government supports as well, right? So there are government supports in Germany offered by the KfW. There are great government supports by the BPI in France, same in the Netherlands, the UK, the Futures Fund. So there are various jurisdictions that actually help a lot the startups with taxpayers' money. Now, for those that are more in unfortunate countries where the government do not provide such aid, I would really try to extend the runway as much as possible and try to squeeze as much out of the channels that provide revenue towards the company.
Okay, thank you. And maybe one follow-up question in regards to investor relations in this time, because obviously a lot of startups have told us also that investors are very much focused on their own portfolios at the moment, to do bridge investing, to do follow-up investing, and that it's quite difficult to get attraction with the new investors because they're so focused on their existing startups that they have. So what is your take on that?
Yeah, absolutely. I mean, then again, it depends on the investor. Thankfully, we did not invest in everything that has to do with food or travel or anything that could harm us like great. So in other words, there's no shit show that happened with us. So we did look at other companies, but I can imagine other players, where that had actually a very generalistic type of fund and suddenly seeing 40% of their portfolio going bust, they're not looking to invest in new companies, which makes sense because they prefer to keep this money in order to put them into reserves in order to support these companies. That being said, I think relationships are very important, and you have to nurture them, right? So even if investors are not willing to engage at the moment, they might be, however, in 6 months. Right, and during that moment, it's also a moment to prove yourself that you and the team are really a wolf pack, and even like in crazy situations such as the virus, you can either pivot or start targeting new opportunities that were not necessarily on the product roadmap, and that at the end will also benefit you in the long run.
Thank you very much. I'm turning to Catherine to see if we have any questions from the audience.
Sure, yeah, we've got one that came in from Adelbert Kukowski. From my point of view, fintechs have to look across industry borders, i.e. other industries that could present great opportunities for fintechs, such as the energy industry. Does someone have an opinion or view about the energy industry? No?
Well, I mean, it's an industry that is booming, right? The fintech is, like I said before, a very, very broad defined subject. It's like if you would say, I invest in sciences. It means everything and nothing in a certain way, or I invest in artificial intelligence. Now, anything that could enable energy companies to sell more or to be more user-friendly or efficient, there might be ways for startups to link these bridges. So definitely there are opportunities. Question is, you have to seize them and flourish on them.
If we have no more audience questions at the moment, but please keep them coming. It's always very interesting to also answer those kind of questions. But maybe want to turn again to Lucas. And I mean, we've been talking a lot about support, of course, from investors, from government, from all kinds. And you were mentioning that you were yourself supporting your SMEs. How is that for you, like community-wise, because that's always so important, in relationship-wise? And you also mentioned the bank that you're working with now. How has that changed the way of working at Pentaand, your culture and your relationships?
Yeah, I think it's a good question. So, I mean, our entire business model kind of is based on the fact that, in particular, a couple of years ago, small businesses weren't really treated well by their banks. They were not really getting the focus and the attention they needed because big banks were not really able to monetize on smaller businesses, and as a consequence said they are high risk and not really worthy to deal with. And we kind of came from a different perspective and said it's the backbone of the society and the economy in almost every international country. So there needs to be a better way. And we also said it starts with trust in banking. And one of the earliest kind of objections against our business model was, but who's going to trust you? But then we always kind of said back, but who is trusting the larger banks these days as a small business? And they're also not trusting them. So what we realized is it's about trust, but in a different way. So we started from the early days with a community model. We've got a Slack community with our customers. We've got a very close way of communicating with them. We, for example, speak in the informal version, so du instead of sie, with our customers, to be really on an eye-to-eye level communication, because the topics they have to go through, from setting up a company to getting a tax accountant to doing their banking, all of this is filled with jargon, with paperwork, and with all of these things. And it is difficult, especially for people who don't have a financial background, who are very, very good at building their business and kind of building something or selling their service, but they don't have to be the best accountant or the best businessman in the background for doing the finances. So we always kind of provided learning material and educational material to really make sure that they can focus on growing their business. And then with Corona, of course, this became even more important because customers were reaching out and saying, hey, how do I deal with a situation where I'm an event agency and there's just no event anymore? Like, how do I deal with this? And kind of making sure that we just don't brush them off and say, look, well, it's your problem to figure out. we sat down together and said, okay, look, how can we help them? Transparency is one side. So what are the government opportunities? But also, can we, from our kind of learnings over the last couple of years and our former startup experience as well, can we give perhaps useful advice about what I think also Thierry said around pivoting a business model, finding new opportunities? I mean, we see it here as well. It's an online conference, something which rarely happened pre-corona. And I think these type of things is what we gave our customers, and staying true to our mentality to talk on an eye-to-eye level with our customers is, I think, something which our customers respected us a lot for. And it's one of the key foundations of our business. So I think it's about the customer through the highs and the lows, because it's like a good marriage.
I have another question here from Slido. It came in from Edward Fowler. In a post-COVID world, is there finally an opportunity for currency alternatives? Will cryptocurrencies fail or succeed? Who's going to take that one? Smiles.
I'm happy to take that one. Absolutely. I think the moment cryptocurrency was invented, it was there to stay. I just believe that COVID-19 is just another a milestone during this lifetime of cryptocurrencies that accelerated the push in order to become more of a currency to be used on a daily basis. I can imagine, I do not think that it will be in instance, but it will definitely push big incumbents and other parties to think completely different about blockchain as a technology as a whole. And as well about the use cases of cryptocurrencies. So I definitely see that as a positive attribute, but I do think still it will take a couple of years until we will see the proper use cases by banks on an international scale.
Yeah, I guess from our side, you really have to define what you're talking about. So if it's a cryptocurrency like Bitcoin, Ether, and the hundreds others, yes, there is a certain niche for them. They are traded like wild. That's not what I want to put my attention on right now. For us as a large bank, it's also very interesting what's happening in the, let's say, digital currency space. So what we see now and what you can see in the press is that we performed one of the first transactions with central bank digital currencies in France. One of our internal startups is working on these topics, and several teams. And we think there's a lot of music, as you would say in German, in the topic of the euro, for example, on a blockchain, because it will obviously reduce cost of a lot of transactions that are costly right now. So personally, I see more of an impetus to develop in that field than only or solemnly in the trading and cryptocurrency space. Apart from utility tokens and so on. So I think we'll see a shakeout, and we'll see what really stands the test of time. Bitcoin certainly will as an investment vehicle. Let's see what's up with the others.
Yeah, I can maybe add to that. Not just in terms of cryptocurrencies that be seen as the use case. In recent years, and what we see is particularly also in Switzerland that has now become from the crypto valley, like how it's called, right, to different types of digital assets, and then that's been a huge trend. And we have a bit more than 500 banks in Switzerland, of which 20 today can offer digital asset as a service to their customers, which is a quite low number, and in that case it would be cryptocurrency. But what the mindset shift that we've observed a little bit is that things have to be digitized one way or the other, and it is a customer demand, and it's also to prevent risks or frictions. And I think one of the most massive frictions we have now experienced with Corona, when if you haven't digitized whether it's assets or processes that, it can really cost a lot of money. And I think just from a mindset perspective, we see things gearing up now a little bit, especially also in that space, to really now make an effort to make these offerings and to allow customers to have their equities, as a digital in digital platforms, and to trade those assets, and to also, of course, and I agree with Christoph. It's a slow process, and it remains to be seen what kind of use cases are really going to be super successful. But at least now we see a bit of a picking up when it comes to that, especially also from the capital market side. That has always been pushing for these kinds of assets now being traded.
Well, now they're coming in fast and furious. Okay, we've got another one. How do you feel that privacy and security concerns will reduce the use of customer data for fintech companies, and will this have a drastic effect on user experience?
Well, I think I take this one. I think it's very, very important that when we talk about data privacy and customer data, I think it needs to be, as also GDPR defines it, but it needs to be privacy by design. And if you can only build your business model based on kind of exploiting customer data and kind of trying to use it in the customer's harm, you should not be having a business. And I think what is the key goal of everything around data privacy and making use of customer data is working together with the customer and telling him or her why the data is needed, what is being done with it, and what's the opportunity for the customer, and also being transparent about what's the opportunity for the recipient of the data. So I think it's, again, the topic of transparency and making sure that you align the incentives between the customer and the business, because otherwise such a business is designed simply to fail. And I think, is it going to be an impact on the customer experience? Yes, I think so. But ultimately, it's about how do you bring it across. And if you fake it, it's not going to work. If you actually really mean it, and have your entire company's ethics and vision set around being aligned with the customer, even with harder data protection and data privacy laws, I think you can still build a formidable business.
Thanks, Lucas. One more question before we wrap up the panel. What is the panel's perspective on the new wave of finance startups targeting an even younger Generation Z audience, like messenger banking product Zelf, for example? Oh.
Sorry, I did not fully understand the question. Could you repeat it?
Your perspective on the new wave of finance startup targeting even younger Gen Z audience, like the messenger banking product Zelf. If you're familiar with that one.
So just in general, how there are a lot of fintech companies that provide solutions for teenagers today. So there's no real challenger bank in that space. So there are a few that try to sprout in that vertical. I do believe that there is a lot of there's a use case for it, because ultimately, if you think about it, I mean, when I had my first bank account and I started it, I'm still having it, and that's like 20 years ago or something like that. You know, so definitely there are use cases where that can be exploited on those generations, given especially that they're even so much more tech savvy than all the older ones. I hope that answers the question.
From my perspective, I think I know which startup the question was directed to. It's a messenger-based bank. Essentially, they don't have an app. They don't have a particular web portal, but you do everything via Messenger and interact with a bot that gives you your. We can do transactions and so on. I tweeted, I think yesterday, I'm too old for this bank. And this might be true with 36 years by now. I'm too old for that. But it might strike a tone. I'm always sometimes surprised by how certain value propositions really swing well with their target group. So let's give it some time. Let's see how it picks up. From a general perspective, there's always the question, and then what? Then you have a lot of clients. how do you actually make money out of them? And that's where it gets tricky, right? But that's where you need a lot of, you need large numbers, and you need customized services, and you need to be active in several markets with, and that's the game the neobanks are playing, right? So right now it's growth, but the path to profitability is one that is not easy, because with some standard banking account and some zero fee transfers, zero fee credit cards, you won't make much money. So the question is, what do they plan on doing differently in terms of products that they will push throughout these channels? And I see a lot of, still a lot of opportunity there. Scenario-based planning, somebody that really helps you raise your family and be prepared for any financial issues that you might occur if you want to buy a house and so on. I think there's a lot of consulting opportunity in there. And I think those that will capitalize on these scenarios that people are in, and Generation Z has a specific set of scenarios, once again, double crisis and so on, those might be the winners and come out first in this new world.
Nice. We're going to wrap it up. Does anyone have any closing comments they want to make? Deborah, you want to close this group?
First of all, thanks so much for having us. I think it was a very interesting round in terms of having all the parties covered that kind of belong to a fintech ecosystem, right? You've got your accelerator that is looking after the startups with F10, and then you've got the investment side that is very important to have, and then we're very happy to see increasing numbers of venture capital companies investing in fintech. And then you've got your bank, all the daring incumbents like Société, Générale that are actually working with fintech, which is super important. And then you have, of course, the wonderful example of a success case in German fintech's landscape, which is Pentaand. So I think, I hope the audience had a bit of a 360-degree view on what the fintech scene is currently going through, and also what the outlooks are. So thanks everybody for participating.
Agreed. Thank you everybody for joining this evening.
Thank you so much.
Thank you so much.
Thanks.
All right. Okay. Up next, we'll hear from Diane Delava. She's the founder of Mattrvest. In this last keynote, Diane will talk about overall trends in money management, the impact of technology, as well as finance becoming more sustainable, and the key drivers behind that. A combination of changing consumer preferences, unstable financial markets, and the emerging new technologies is, on the one hand, leading to new emerging business models, while forcing some of the largest financial institutions in the world, of course, to innovate and rethink the new normal. Diane, as I said, she's the co-founder of Mattrvest, where she's working with a vision to help youth across the world save for what matters to them. Coming from a small town in Belgium, she's an entrepreneur with a passion to make sustainable businesses while employing communities of youth across the world. She's an unleashed talent and a previous UN delegate, and also a Factory Berlin member. Welcome, Diane.
Thank you. I'll just share my screen. Thank you for having me tonight. I'll share my screen, and you should see my screen now. Cool. So first of all, good evening to all. I'm Diane. I'm one of the co-founders of Mattrvest, and I'll take the next 15 minutes to talk to you about the future of how we save our money. And to begin, after Catherine's introduction, I wanted to just briefly introduce myself. I'm a young tech entrepreneur with a deep focus on creating a positive change on the society. And for the past 3 years, I've been focused on building impact-focused businesses in Asia, US, and now Europe. I'm currently building Mattrvest. That's why I'm here tonight. It's a venture-backed fintech where I've been around raising awareness on sustainable finance and enabling all of you to take your first step towards more sustainable financial lifestyle with the initiative My Money, My Planet. And whether or not it's sustainable, the future of how we save our money is dependent on how the financial ecosystem will interact with retail investors in the future. So let's go through two main points in this presentation. First, my generation deals with money in a fundamentally different way than the way my parents did or my grandparents did. And so I'll first cover the evolving consumer preferences before talking a bit about the changing financial landscape as a result of those changing preferences. So let's start. And we talked about cryptocurrency. Actually, this is a slide that I like to show because my grandpa had a pension and he actually benefited from it until he was 100 years old. And I believe that our generation needs something different that we can rely on. Because as you currently may know, in Europe, Europe has a 2 trillion per annum savings gap that needs to be filled by 2057. And that is the equivalent of adding a Canadian economy to Europe's economy per year, which leads to wonder, is that possible? And is the future of our generation secure? And so let me take an example, and let's take Sophia. Sophia, let's say she represents our generation. And Sophia's case is the majority of us, and we are stuck in this vicious circle of financial management. And it's not just about the lack of financial planning, but that lack of financial planning leads to a lack of saving, which actually leads to a lack of long-term investments. And so if we choose to stay with the safest option, which is to keep all our savings within our bank accounts without having in-depth knowledge about it, we will suffer from this, from the consequences of it in the short or medium term. And so Sophia is the majority of us, and that you can see that it's 58% of the millennial population. And despite having an enormous amount of options available in Germany for people to invest their money. And so we explored this further within Mattrvest, and we have focused on sustainability. And we found out that around 2/3 of the population, whether they're an investor or not, were keen to invest more within sustainable financial products. And however, most of them, and the same actually proportion, did not know where to start. And when you look at investors on the left side, most of them are unaware that there are sustainable financial products out there. And on the right side, if you look at non-investors, they're just overwhelmed, and lack of knowledge, it triggers the fact that they do not know where to start their investment journey. And tech might be an enabler. And the last few years, and it's funny, we just talked about a messenger-based bank, because what you can see on this graph is that you can see the growth of messaging platforms. And these last years, these messaging apps have had more active users than apps. That led to lower cost of acquisition and higher engagement. And so that those messaging interfaces also help the user to have a curated journey designed for him or her only. And that enables the user to understand where to go and not be overwhelmed by the information, just as TaxFix is doing with taxes in Germany. Tech, yes, is a solution, but I think that financial decisions, and we've seen financial institutions always need an advice side. And this is stats for millennials. And as you can see, millennials trust for first and foremost themselves, followed closely by a financial professional. And so you can see that even though we are moving more towards fintech, and I'll show more numbers afterwards, but we're slowly moving more towards fintech, but the advice still needs a financial professional, because if you look at social media, only 39% of the millennials actually trust social media for financial advice. And so all of this research led us to these three words, and which I believe are the three pillars that the next generation of products need to rely on for our generation to invest for the better. And I think Lucas from Pentaand touched upon the relatable side on the way they address their customers. And so I think that really our generation needs a whole new range of financial products, which is more relatable, responsible, but also transparent. So let's take a look, a few case studies. And I think this is a very boring topic, which is pensions and retirements, but the Central Provident Fund of Board of Singapore takes it in a whole different way. And I don't know if you've been to Singapore, but in Singapore, food is an integral part of Singaporeans' life. And the CPF board has understood that. And so they're using their Instagram channel to attract the user with food, but then talk about boring subjects as pension, retirement planning, and long-term savings. And their Instagram channel is not only to communicate and educate the user, but they're also gathering a tremendous amount of feedback from the user through their posts. Another example, and again on pension, is Super. And they basically work in Australia with the superannuation portfolios. And they've added a sustainability component to make it very cool. But they also make the communication on pension sound futuristic in terms, instead of making it ancient. And so they use human-centered design to make the user realize that it can be simple. And while making that, while enabling the user feel that it's simple, they're adding this trust layer, which is a huge issue in fintech in general. So yes, because the world is changing, consumer preferences are changing, and I'm now going to switch to more of the changes that the financial landscape has seen within the past years. And I think that the change in the financial system is not going to happen with the small players killing the big ones. But I do believe that there's a fundamental rebalance needed to restore the financial system as a whole. And so within the financial system, let's take more of a look at banking. And as you can see here, you can see three future states of banking. And some countries are already at the stage of banking as a lifestyle. And these countries, some of the developing countries, have switched directly from cash to being cash-free while not even going through the stage of the cards. And well, all this time in Berlin, we're still at our cash, but I guess that will also evolve over time. And I just wanted to also show you an example of banking as a service, and that is news from 2 days ago. 2 days ago, where the UK's open banking implementation entity has just released an app store, which is only showcasing the financial service apps, which are currently using open banking APIs. And so this app store has 54 apps which use open banking, and some are customer facing, some are not. But it really shows the evolution of fintech on how the user will use banking in the future. And when we talk about banking, let's take even a step further into the change happening in the asset management industry, and it's actually also moving at a rapid pace. And you can see that it's going way more into automation. It's getting less into charging the customer high fees, and it's moving more into giving them all the benefits and providing all those benefits at even a cheaper cost. With even more returns. And so wealth as a service is evolving more into a hyper-personalization in the future. And so the customer will really be at the center and serving their needs. So I've seen, I've checked out more the evolution in of overall until asset management. And so I just wanted to show these fintech numbers and how it, when it comes to adoption, how does it work and where are we? And you can see that Europe is lagging behind. If you see this graph, only Germany and Spain are above the average adoption. And yet that's still far behind China. And as a matter of fact, you can see that in the top 4, there are 4 developing countries, which is China, India, and Brazil. And well, they benefited from the fact that they had huge unbanked and underbanked population, which provided a very fertile ground for rapid growth of fintech. And so these fintechs led to financial inclusion of people who never owned a bank. Never owned a bank account, sorry, because most of us don't own a bank. But and an example is Gojek, and Gojek in Indonesia. And so Gojek is like the Uber in Indonesia. And actually, within the wallet, within the Gojek wallet, the customers could ask cash from their wallet directly from the driver of the bike or the car that they were taking with Gojek. So Gojek made their drivers the ATMs. And so people did not need to have a bank account. So within their wallet, within that fintech, they just used the drivers, what they had at hand to make people have, well, being able to take cash whenever they wanted. And so if you look at this data, and this is closer to home, I wanted to show how Germany is evolving. This is data from 2019. And the change within the next 3 years is going to be huge, because you can see that Germany is way above the European average, and the evolution of fintech within Germany is going to tremendously change and grow over the next 3 years. So after all these numbers, and yeah, most of them are impressive, I just wanted to show you a case study, and I chose Ant Financial. You might have heard of it, you might have not. It's a customer-facing app, but it's more in China. They have three quarters of their customers in China. And Ant Financial is today the most valuable fintech in the world. And to put you in perspective, Ant Financial is approximately as valuable as Goldman Sachs and Morgan Stanley combined. So it's huge. And a bit about their history. They started as an offshoot of Alibaba. So they were previously known as Alipay, and they were a payment tool for Alibaba. But today, Ant Financial is shifting from being purely a payments business towards being a full-range financial service company. And this is actually a path that other fintechs can follow as well. And what is impressive within their story is that the change they're triggered within the consumer behavior is enormous. Because previously to this app, users, well, all the payments of the users were handled with paper transactions, and they had to pass through the People's Banks of China. So that was a tremendous change on the consumer side. And Ant Financial did it brilliantly, because now they have 1.2 billion customers worldwide. And they're now strengthening their customer proposition and offering higher value products like mortgages, credit cards, and credit scoring. And they are really turning into the bank of the future. And I wanted to show what they're doing also, because this biggest fintech in the world is turning to sustainability. And they have been recognized for inspiring consumers to reduce their carbon footprint within their app. And how did that? So let me just explain to you how that works. Sorry. So users on the app are encouraged to record their low carbon footprint through the daily actions that they take. So like public transport or paying utility bills online. And for every action that they take, which is green, they receive green energy points. And when they accumulate a certain number of points, they have a tree, an actual tree is planted on their behalf. And users, you can't see on the screen, but users can view the images of their trees in real time via satellites. And additionally to that, the users can also choose to protect certain size of conservation land on the Ant Forest platform. Ant Forest is also going further, and they're exploring innovative ways to alleviate poverty and improve the lives of local people by leveraging the power of digital technology. But the work that they're doing is enormous as a result of Ant Financial. So this is Ant Forest. And their initiative actually resulted in the largest private sector's tree planting initiative. So it's huge. And I just wanted to make a transition because I do believe that Ant Financial is making huge impact, and consumer love it. And on our part of the world, we're talking more and more about the sustainable side of things, and I do believe that finance and fintech has a huge part to play. And sustainability can be found in any of the financial instruments that you can find today, whether it's pension funds, home loans, and bank cards. You can make all those products sustainable. And I just wanted to briefly put you the definition of sustainable finance, that basically just is finance that takes into account environmental and social considerations. And this is the EU Commission's definition of sustainable finance. So whether we see it or not as retail customers, because it's more on the institutional side, sustainable finance is growing, and Europe is leading the way. And you can see that Europe is also pushing for sustainable finance to grow with a lot of regulations they're taking on, taxonomy, et cetera, et cetera. And I just wanted to end this because we're seeing more and more fintech which are sustainable, like Tomorrow Bank, but we also have other former banks with our GLS, Etika, Triodos, which are sustainability focused. However, I think that today in the fintech, there's a lot more that the customers need to see in terms of sustainability, because sustainability within finance is a problem that we as retail customers do not see. And so I just wanted to end on this. I just have a slide before, but after, but I just want to leave you with a question of how sustainable is your bank? Because at the end of the day, whether you care about how much meat you eat, or about how much you take your bicycle, or how much you travel by plane, sustainable finance can have 27 times more impact than any of those sustainable consumption habits you have. And so that's where we're yet to unleash the power of fintech, I believe, in the future. And China is already leading the way. And Europe is yet to take the leads and come next. So yeah, that's about me. Feel free to contact me, and I hope you enjoyed this presentation.
Thank you very much, Diane. That was actually really interesting and showcasing the different approaches to fintech, and especially addressing the changing needs and desires of these next generations. So it's a lot to learn and certainly a lot to adapt to. We've wrapped up this edition of Futures Forum. We're really happy to have worked with F10 on this and are very grateful for the various thought leaders who were able to join today. Thank you for tuning in. We hope you enjoyed it, and welcome you to reach out to us at Factory Berlin to learn more about what we can do together as we reimagine collaboration. Have a good evening.